All right, welcome to Talk Tickers. Today, we're diving into Bitdeer's Q2 2025 earnings. And look, on the surface, these numbers are, well, they're just plain weird. We're talking a massive beat on revenue, but a loss that was just shocking. But the market's reaction tells a totally different story. So let's get into what investors are really seeing here.
So this is the big question, right? How do you get a 72% beat on revenue, but miss your earnings per share target by over 500%? It seems completely contradictory. The real question is, what's actually driving the company? And more importantly, what are investors deciding to pay attention to?
So let's put these numbers right next to each other. Revenue came in at an incredible $155.6 million, which absolutely crushed what analysts were expecting. But then you look at that GAAP EPS, that's the official bottom line profit number, and it was a loss of 76 cents. The street was looking for a loss of maybe 12, 14 cents. So this was a huge miss. It's a classic mixed bag, but trust me, the real story is buried in the details.
Okay, so here's the key. You have to understand where that revenue came from. The two huge drivers were, one, $59.3 million from their own Bitcoin mining, and two, a whopping $69.5 million from selling their own SealMiner machines to other companies. This is so important. This isn't just a crypto mining story anymore. It's a hardware story.
And what did the market do? The stock jumped 7.2% the day after the call. Now, that's a crystal clear signal that investors looked right past that ugly accounting loss and saw something much, much bigger happening with the company's strategy. So, what did they see?
All right, so first things first, we've got to dig past that headline shock. We need to understand the bull case that's building up around Bitdeer, because it's all about a major strategic pivot.
And listen, management is telling you this directly. The Chief Business Officer, Matt Kong, he called Q2 a key inflection point. See, they're not just reporting numbers here. They are signaling a fundamental change in their business model, and it's all powered by their own technology. And this chart, it shows you exactly what they're talking about. Just look at how big that SealMiner sales slice is. It's now their single largest source of revenue. Bitdeer is going from just using mining tech to being a major supplier of it. This is their vertical integration strategy playing out right in front of us. And this is how they do it. This is their secret sauce. They control the whole chain. First, they design their own chips in-house. Then, they manufacture the actual mining rigs, the SealMiners. Then, they use those rigs for their own mining operations. And finally, any extra capacity they have, they sell to the market. This gives them this incredible control over their costs, their technology, and how fast they can scale.
Okay, so this gets us to the core of it all, the real why behind all this market optimism. It really boils down to three things: strategy, massive scale, and their big bet on silicon.
And it all starts right here, in a place called Clarington, Ohio. Now, you need to understand, this site is way more than just another crypto mine. This is the centerpiece of Bitdeer's big move into the red-hot world of high performance and AI computing.
And to really grasp the scale of what they're doing, just look at this number, 570 megawatts. That is a massive amount of power, and it's all pointed towards their push into the AI infrastructure market, a market that is absolutely starving for this kind of large-scale capacity.
And look, the way they're doing this is really smart. They're already in deep talks with a partner to build the site out. They're also aiming for project-level financing, which basically means their partner puts up the cash, so Bitdeer doesn't have to spend a ton of its own money. And maybe the smartest move of all? They locked in their power deal before a regulatory change in Ohio, giving them a huge cost advantage over anyone trying to build there now.
Okay, so that's the big picture strategy. Now, what's next? What did management tell us to expect, and what are the big catalysts that investors should be watching for?
Well, they are moving incredibly fast. They plan to hit a self-mining hash rate, that's basically their total computing power, of 40 exahash by October. And now they're saying they'll actually beat that by the end of the year. This timeline shows you their clear plan to become one of the absolute biggest publicly traded miners on the planet.
So before we go on, a real quick lesson. You're going to see J/TH, that's joules per terahash. All you need to know is it's the key metric for how efficient a mining machine is. It's like miles per gallon for a car. The lower the number, the better. And this is their moonshot. Their next generation chip, the SealMiner A2, is aiming for an efficiency around 5 joules per terahash. Now, that wouldn't just be a small step up, it would be a genuine breakthrough. It could set a brand new standard for the entire industry on energy efficiency, which is the name of the game for long-term profit.
All right, let's pull all of this together. It's time for our verdict in what we call the next call. So here's how it breaks down. The bull case is pretty clear. You've got this powerful, vertically integrated model, you've got massive infrastructure scale, and you've got a really smart pivot into AI. The bear case? Well, that's also clear. Deep accounting losses for now, a lot of risk that they can actually pull off these huge plans, and of course, the wild volatility of the crypto market itself.
And to really get inside their heads, you have to hear this from the CEO, Jihan Wu. This quote tells you everything about their long-term conviction. This belief in Bitcoin is what drives their balanced approach to managing their crypto. They sell some to run the business, but they hold on to a lot for that huge potential upside. It's a practical strategy, but it's rooted in a very, very bullish vision.
So our rating is outperform. The market is basically telling us that it's willing to ignore the short-term accounting losses to reward the company for its strategic vision and execution. We believe this story's shift from just a crypto miner to a digital infrastructure and silicon powerhouse is real, and it's just getting started.
And that brings us to the trade idea. The thesis is simple. The market is still valuing Bitdeer like a Bitcoin miner, not the infrastructure and tech company it's becoming. The catalyst to change that? A formal announcement of their AI partner for that Clarington site, which could come as soon as this quarter. An announcement like that could trigger a major re-rating of the stock, pushing it up toward where most analysts see it in that $19 to $23 range.
And finally, our standard but very important disclaimer. This analysis is for informational purposes only. This is not financial advice.